Hello traders, this video, the title of this video is MACD. MACD stands for Moving Average Convergence Divergence. Alright, so when we are talking about convergence, is that one moving average is moving towards another moving average. A divergence means that a moving average is moving away from another moving average. I want traders to pay attention carefully to what we're going to discuss in this video. It's about MACD, something else that you have completely missed. The purpose of our website is to assist traders to understand their trading tool and to use it profitably together with the market principle. What is the market principle that is governing MACD? Alright, it is the same market basic, the first basic market principle that is governing all, alright, technical indicator, RSI, CCI, MACD, Bollinger Band. Here it is, pay attention. When a financial instrument, okay, if the price of a financial instrument is increasing in value, but the true value of the financial instrument is static, which means it's not increasing, there is a high chance that the price will return to its fair value. That's what a lot of traders call return to the means. So something that is value at $50, the true, suppose the true value of your watch, okay, is $50, all right? And for one reason, one day, people are willing to buy it at $500. And you know very well that the true value of your watch, okay, is $50. It's overvalued. But over time, the price will not stay at $500. It will return slowly to its fair value, which is $50. One day people will say, yes, it was crazy to buy a watch at $500. Only stupid people were buying it. And they will say that the normal price should be $50. And then slowly, the market will rectify itself and bring the price back to its fair value. This is the basic, my apology for the pop-up, this is the basic market principle that governs all technical indicator, including the RSI, the CCI, the MACD, okay, you name all the technical indicators. MACD, in fact, is a very powerful trading tool, and a lot of traders are misusing it because they don't understand MACD, all right? So we are trying to help traders to understand. So the standard MACD is 12.26.9. So the standard MACD 12.26.9 is comparing, okay, the moving average 12 to the moving average 26. So if the moving average 12, it moves away from the moving average 26, and the moving average 26 did not move up so far, talking about the market principle that we have already discussed, there is a high chance that the moving average 12 will return back to the moving average 26, which is considered as the true value of the moving average 26, of the moving average 12. My apologies to this. So what we are discussing here is that when a moving average 12 goes away, deviates, all right, or move away from the moving average 26 too long, there's a high chance that slowly but gradually, as you can see here, you return back to 26. There's one thing that I explained to traders about the RSI lifetime, traders that are following us at dayprotrader.com, is that if the moving average 12 deviates from moving average 26, and the true value of the financial instrument also was increasing in the meantime, the moving average 12 does not have to return straight away to the moving average 12, to the moving average 26. Even if you return to the moving average 26, it doesn't mean that the price will go down. It means that the indicator is resetting itself, because if you look carefully here, let me explain myself to you, that's what I say to you, you need to pay attention carefully, because this is not something easily that trader can understand. Okay, so you can see here, because my screen is a bit making too much noise, my apology to traders, message popping up all the time. So but you can see here the price was going up, all right, you see here was going up, And by the way, the green line here that you see on this chart, that's the simple moving average 12, which is also represented by MACD itself here. You can see that MACD was away from the moving average 26, which is represented by the red horizontal line. So the red horizontal line represents the moving average 26. The green line represents moving average 12, which is MACD itself. But here on this chart, you can see the green line is the moving average 12. And the red line here, that's the moving average 26. I'm using here simple moving averages, all right? You can see that the moving average 12 went away too far. The distance between the difference, MACD is representing the difference between the 12 and the 26. So a deviation of the 12 from 26 is telling us that the 12 has a high chance to return back to the 12, provided that, all right, provided that the 26 did not move up so much, or the true value of the financial instrument did not increase when the 12 went away from the 26. This is about using MACD with a market principle. Trader data foreigners at www.dayprotrader.com will understand what I'm talking about here. You have another line here, which is the pink line here. That's the moving average 14, the simple moving average 14. The difference between 12, too many noise, apologies to trader. The difference between 12 and 26 is what? 14. All right? And the pink line here represents simple moving average 14. Coming soon on our channel on YouTube, I'm going to talk to traders about the power of moving averages. A lot of traders do not understand how to use moving averages. Apart from the price, which is the number one indicator, the second powerful indicator is the moving averages. And the third one that we can say, or equal to the moving averages, is the Bollinger Band. Now, you can see here, whenever we see two moving averages, one above the other, we are not looking at two moving averages, we are looking at the difference between the two moving averages. So for instance here, the 12 above 26, we are checking the slope of 14 because the difference between 12 and 26 is 14. So MACD in fact should be used on a weekly chart. The standard MACD is designed for the weekly chart. Why? Because in a year we have 52 weeks. All right, and if you divide 52 by 4, all right, you have 13 weeks. But instead of using 13 moving averages, traders always focus on 14 because some months are longer than the others. So they use 14. So 14, you will see people will use RSI 14, CCI 14, stochastic 14. One of the reasons is the yearly cycle. All right, now you understand it. So that's why you have the 26 and 12. The difference is 14. All right. So the moving average, the pink one here, that's the 14, which is highlighting the difference between the MACD and the zero line. But as I explained to you, when we are using MACD, we must use MACD. We must understand MACD by using a market principle. If you look here, this session here. Hope my chat, I'm going to talk to you like this because I don't want to stop the video. You can see that MACD went too far away from the zero line, which is the simple movement 26, the red line here. See, MACD was a bit too far up, you see. So it's telling us that there is a deviation. But you can see that when the MACD was deviated away from the zero line, all right, the price was not going down as it was returning back to retest. Okay, you can see here it was going down, crossing below the zero line. Some trader will sell. Why the price did not go down? Because the reason why the price did not go down in this case, instead went horizontal. The price, whenever you see the price horizontal like this, the price is highlighting a value zone. All right. So the MACD was sloping down in this session here. All right. The MACD was sloping down in this session here, as you can see, but the price was going horizontal. We remember what we said. You do not want to violate the market patterns, the rising channel, the horizontal channel, and the declining channel. These are very, very important. So, because the fundamental or the true value of this stock protect and gamble, okay, the true value also was increasing when MACD was the MACD was deviating away from the horizontal line, was deviating from the moving average 26. All right. The true value of protect and gamble was also increasing. So the return of MACD to the zero line will not correspond to the decline in the price. The price will not go down. Though MACD deviate from the zero line, MACD was returning to the zero line. You see here it crossed below the zero line. But because the true value of the financial instrument also was increasing after the deviation, the price will not go down. The price will have gone down if the true value of the financial instrument was not increasing at the same time that MACD was deviating from the zero line. On the other hand, if MACD was going down and deviate away from the 26, from the zero line, all right, if the true value also is decreasing at the same time that MACD was going down or declining, all right, the price will not go up after MACD crosses above the zero line. All right? Because the true value also was decreasing. At the same time that MACD was going away, was deviating away from the true value, which is the simple moving at 26. If it's decreasing at the same time, when MACD crosses above the zero line, the price will not go up. The price may go horizontal only to continue the movement to the downside. That's what we call a continuation. All right? All right? So, you see now? So, when we combine the market principle that stated that when the financial instrument is decreasing in value, all right, and the true value also is decreasing, when MACD cross above is zero, is signal line, the price will not go up because the true value also has gone down at the same time that MACD was deviation. So it's not a distortion. A deviation is a distortion of value. So, but if, pay attention, that's why I said is very important. If MACD was going down, all right, deviating away from the zero line, all right, and the true value of the financial instrument did not go down, when MACD crossed above its zero line, there's a high chance the price will return back is to its true value. Because the true value did not go down when MACD was deviating from its true value, from the 26, as MACD crossed above its zero line, we will buy straight away. You see this what's happened here? MACD was going down, but the true value did not go down. MACD, you see, he has to cross above the zero line. One must look for opportunity to buy. In fact, using the price alone, drawing the horizontal line here, you see, you can make excellent decision. My intention is to communicate to TSTW24, TSTW is your traders. Sometime a trader will purchase our tool, will say to me, Joe, this is very simple tool, what kind of this? But then they will slowly follow us, and they will see that what we are talking about, is what one needs to know. All right? So you see now, it's very simple, but it's also very powerful. We are only interested in traders that are willing to learn to make excellent decisions by themselves. All right? If you want to purchase the Forex-MACD pool, one must go to www.dayprotrader.com and or go to our website, our web store, and purchase the Forex-MACD Pro. I hope you have enjoyed this video also about MACD. But before we go, to summarize, when you are using MACD, one must understand that when one is comparing the moving average 12 to the moving average 26, it's based on a market principle that when if there is a deviation, there is a distortion if the true value has not changed. But if there is a deviation to the upside and the true value also has increased, it's not a distortion, the deviation in that case. All right? In fact, we will take advantage of it. As you can see here, traders that understood that, bought it instead, the price went up. Sometimes you see the price will gap up if crazy traders that are trading anyhow start selling anyhow, their order will be filled and they will be taken out as the price gap up big time. All right? On the other hand, when MACD deviates away from the zero line to the downside, if the true value also was decreasing at the same time, when MACD crosses above the zero line, above the signal line, the price will not go up because the true value went down So what's the point to buying it? Okay, if it costs above the value went down at the same time. But if the value did not go down at the same time, the MACD was moving away from the zero line, as MACD returned back above the zero line, signal line, the price will go up or even a gap up. Ladies and gentlemen, that's the end of this video about MACD, and I hope you have learned something very important, combining the indicator, combining the trading tool, combining the trading system with the market principle in order to make excellent decisions. The understanding of the market principle allows traders to know whether there is a distortion, a true distortion, or a negative distortion. They will understand also when to enter the trade and use their tool more efficiently. Until the next time, enjoy yourself and be very happy. We are the TSTW24 and TS MACD Pro traders. This is about MACD. Thank you for watching, and we will speak to you very soon.